The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, and it's my pleasure to be here Monday through Friday, 11 o'clock till noon. And the Dow's down 45, S&P's down 9, Comp Index is down 65, wow. And the VIX is rallying a little bit. It's at 10.59. It's up 58 cents. It needs to get into the 11s to be able to sustain the selling. Gold is down. Let me just do this right now. Gold is down. Get all these out the way because we need to talk about some other things. Down 5 at 1244.2. And silver is down as well. What is it down? It's down 0.06 at 16.73. A little bit better chart formation than gold, but on the daily, not so much the weekly or the monthly. You've got, let's see, high-grade copper was doing very well early this morning, and it's still doing quite now. It's doing very well at 2.712. Divergence there where they're saying economic conditions are actually kind of improving. Fascinating. But then you go to crude oil, and what is crude oil doing? It is up 57, having gone from the 52s down to the 41s. It's at 45 right now, 45.30, up 57 cents. Nice rebound, 1, 2, 3, 4, 5. This is the sixth green candle so far since the plunge to the downside. That is good, and what it's done is it's snuck above the level that I was looking at from the 19th, the 19th of June, 45.28. I said it needs to close above that. So far, it's above that at 45.31 by a few cents. Needs to hold there. The weekly chart will improve if by Monday or Tuesday, instead of giving back the gains, getting back to the 44s, it actually goes to the 46.50, 46.80 level. That'll be very good action in crude oil. And that should be affecting negatively the, let's go there. This is the XAL, not XL, but XAL, which is the ARCA airline index. Yeah. It's only up 10 cents, kind of stuck in the sideways trading band, not breaking down, but not breaking out. So this is going to be very interesting because TLT, I had anticipated that the bonds would rally if the market starts to take on water and starts to really take a dive. And it did that, but while the market was really consolidating sideways, basically, and now the TLT has gone from, we were long from 123 from our opening call subscribers. We actually got out today at 125.80 something for a 2.80 profit, but it had it 128.57. I wanted to see how it held the up channel support line, and it just took it out. So now that impacts the weekly a little bit, but the weekly technicals are still quite good. So I'm watching this very closely because if I go to right here, if I go to the yield chart, the 30-year is the white. This is a weekly chart. Brown is the 10-year T-note yield and the 5-year T-note yield. Look at that. It's rallying, not big, but it is rallying. So it's saying that we've got to watch this very closely because it still looks like lower lows and lower highs. But in the next three sessions, what happens to bonds and yields is going to be very important, and for a couple of reasons. Look, wood, the iShares Global Timber and Forestry ETF, probably is going to make a peak G at least this week by tomorrow at the close in the weekly chart. But we won't really know until at 61.10, until it really starts trading in the 59.30 or lower area. The HGX, the Philadelphia Housing Index, trading, it had a high of 286.32. It's trading at 281, 5 points lower. And this is going to be really important because if it takes out in the next 3 weeks, if it goes to the 273 area, it's made some kind of a top, which might be more than a short-term top. I'm very cautious about this market. I don't like what I see at all. And that means that the rotation into maybe the XLF, the financial is going to be tested because you've got a cup formation in the weekly chart of the XLF. You've gone to a leg D in the 10-minute chart. Look, leg D. There should be some kind of a pullback. If this was a Friday and we gapped up, I'd say, whoa, be careful. But it's a Thursday, so there's still the whole of today and Friday to go to see whether it's able to go above 25.02. It did overnight. This is going to be a tough market, but I think it could be rallying because of the yields. Let's just go to the TBT, which TBT right now trading at 35.76. It's up 62 cents. Nice breakout to the upside. Weekly chart is improving. It's not great. And that says I'm going to be watching this closely because, how can I put it? You had a spectacular run to the upside in bonds. Look at the monthly chart of the continuous contract. Let me move this away here, get the 120. Look at that. We're in the Chapman wave inside track support zone of the monthly chart. Look at that. And we were about to break down, and then over the last 4 months, we've managed to salvage that. Actually, it's the last 6 months. We've just made nominal new highs and held this inside track, the green and red dashed lines at the bottom of the bigger channel. And that really is quite important for a couple of reasons. Because if, in fact, we can hold above 154 right now, if we can hold above 144 in the whole month of July, and even just go sideways, but even make one more new high in the monthly contract above the high that's continuous at 157 and 830 seconds, that's going to be very important because it means that the economy is a little bit weaker, and that's why the rates are not as high as they should be. That's my thinking. All right. Now let's go to a couple of things here that I need to look at here. Within the context of the different markets, one of the things I said, semiconductors led on the way up, semiconductors are going to lead on the way down, trading at 82.11. Right on, look at this is the channel line of the weekly chart. Look what's happening. It's sitting right on that line in the Chapman wave inside track support or buy zone. But the MACD is negative finally. Stochastic's down to 66% in the monthly, in the weekly. It tells me that the weekly, the daily, we are short in my opening call from our subscribers. The daily gone from a sell signal to a sell mode, but the monthly, I keep saying monthly, the weekly held the 9-period moving average up until a couple of days ago. Tomorrow, Friday, this weekly chart is going to give an upgrade from a sell signal, which it hasn't even given yet, but immediately going from a sell signal to a sell mode within 1 week. Not good. The monthly chart, I still have it as a leg C to the upside. The up, there could be an alternate count, F/C. I'm calling it C right now because I think that when this is done, we'll still have another burst to the upside later on. But this has got to take place. It's really important. Now, let me do this real quickly. We've got a couple of, got quite a number of questions. I'll get to Peaky's in the Den, a very good one. I'll get to that. But what I wanted to just show you is that the 10-minute chart right here, 10-minute chart is still falling in the E-mini. It broke the 200-period moving average in the 10-minute, and now it's got to try to find some support at 25. Right. How's the take questions out?
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Everyone, we're back. So a lot of questions, both email questions and den questions about the XLF. So the XLF trading at 24.78 is up 26 cents. It did hit 25.02 print, but last night it was up even stronger because, of course, the banks got the go-ahead. This is everything's cool in the banks, all right? However, the cup formation in the XLF with 25.30, the high of the 1st of March, the week of the 3rd of March, at peak D, has seen a very nice retracement back after breaking 23 for briefly. So the weekly chart is leading to the monthly chart. And the monthly chart said, hey, that trend line that you drew in a little while back, it hit it exactly, and now it's stalling at that level. Okay, this is what I'm thinking. Let me go through the XLF at 24.79 has a MACD that is turned positive, but in the M formation, lowercase m formation, or this could be an uppercase M formation, with less strength in this move right now than it was when it went to that peak D on the 19th. And the stochastic's down at 63%, a negative. Tomorrow, Friday, the stochastic will be important for the weekly chart, but very important is the weekly MACD. And the weekly MACD had, if I can just find it right now, last week it had 0.41 and 0.50. Today it has 0.46 and 0.49. It has not yet crossed positive. If today was a positive day all round, we would see that XLF up and we would get a cross positive, and I'd say, wow, next week's going to be spectacular in the XLF. I'm anticipating that there's something going on here, and that the news that triggered the huge move, I mean, huge percentage, and then they all got buybacks. Buybacks mean nothing. Buybacks, there are companies that have bought back, like IBM have bought back their shares and have just wasted an incredible amount of money putting into buybacks when the stock keeps going to lower lows. And there are companies that bought back, and they are fantastic because it's perfect. So buybacks have to do with individual companies. As a general rule, I think that's just like a split. It doesn't mean anything. It doesn't change very much until the reaction of the stock becomes very positive. Okay. Now, when we're looking at the XLF, the candle that gaps up, that closes towards the low of the day, the very next session mustn't make a lower low and then close with a lower low, because that's as you're going back to fill the gap. If it closes inside, and then the third session, so second session after the gap, takes out the high, that is really bullish. It's raising the base, and it's not only raising the base, it is taking the price movement, it's forcing the shorts to constantly cover, and it's forcing the people who either got out and thought, well, it's going to pull back, to get back in, and it gives a lot of buying pressure. Look at this. The KRE, which is the regionals, trading at 55.36. Big gap, up 1. Yesterday it was trading in the 54, 20, 30 area, and all of a sudden it gaps up, and it was up way more overnight. But it hadn't taken out, even overnight, as I recall, didn't take out 56.54, the high of the 12th of June. This one has a better potential for a percentage gain than maybe the XLF, but I need to see how it's going to consolidate the gap. So I do like it. And the question is, why don't we just, because it's only peak B in the monthly charts, why don't we just buy it and hold and just wait for C and D? You know, if it wasn't as a subscription service, that means that if we buy the KRE at 55.35, there's S&P regional banks, and even though it's a peak B, it could pull back to 45. I don't want to have a 15, 20% decline. I'd rather try to time it better and maybe make 1 or 2 slips with a 1.5% loss, maybe 2%, 2.2. But I want to get in and I want to step up. I don't want to buy on the way down until I'm really satisfied that it's made an important base. I think it is making a base, and that has to do with the TLT. And the TLT says that the TNX, which is the 10-year, is going to be very important. It just gapped up. It's almost looking like the banks themselves are the gap up. So my thinking here is that actually yields are going to pull back a little bit, and that the banks will pull back as well. And the TNX at 22.72, 2.272% is going to not get to 23.50 in this move. It has to consolidate a little bit more, but it probably will get there, but not just yet. That's just my thinking right now. So, okay. Now, a couple of other things. I want to go back to this chart here, which I didn't talk about. I was going to, and then I moved on. And that is the ESU17. That is the E-mini 120-minute chart. This arch formation is deadly. See that arch formation in the MACD? See the way stochastic went over 80% and now it's at 74%? Deadly. That rally yesterday, pure fake out rally, and that's the reason why we wanted to stay in our short positions, try to add to the short positions, etc. Now, let me just go this. I did this a little bit with Tommy. I sat in for Tom O'Brien, who's on vacation. I sat in with Tommy in the 10 o'clock show, the Nadix show. I'll do it again tomorrow. So what I discussed was, in my Dow 120-minute chart, the move that went up from 21,333 in the Dow to Chapman Wave 4 to 21,506 in almost like within a day and a half was 174 points. We had 167 points yesterday from the low of 21,310 to 21,487. And that was a Chapman Wave 5 that concluded and a trough D. So I said to subscribers yesterday, we can expect a bounce. It was more than a bounce. I must admit, it was more than a bounce. But the fact that it was a false bounce with a short covering, etc., is proven by the fact that we had an equal rally in price terms. It stopped dead at the trend line that I call the Chapman Wave falling axe formation. It's reversed sharply, given it almost all back. It's down. We're down 75, not all, but a lot. That was a much bigger gain. But the 120-minute chart, look at this, is taking out the big gap up from yesterday. It's taken out the actual gap from the low that was made 21,310, because yesterday we opened at 21,372, up 60 points. So now what we've done is we've taken out yesterday's opening price. That's a negative. That is a big negative. And the MACD and stochastic are turning down. So that's the 120-minute chart. So this is already Chapman wave 1 in a new down move in the 120-minute chart. But the daily has 4, and we are looking at 21,003. I've got to get this right. 21,003, 10.65 as starting a Chapman wave 5 to the downside, as well as hitting our target of the 9-period exponential, the 20-period exponential moving average at 21,311, the red line, the red moving average right there. And the MACD is still very negative, and the stochastic deflected lower. It's the reason why we remain short the Dow. I'll be right back. Basil Chapman, Dow's down 87, S&P's down 15. I'll be right back after this.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Everyone, we're back. So, question I had was IQDG. Let's see. The question is, because it's still a question, right here. Darn. Oh, Basil, when you have time, a friend of mine wants to know if she should buy these two Wisdom Tree International funds, IQDG and EUDG. Also wants to know if she should hedge the currency. Thanks. So let's just go. So the IQDG is trading at 28.24. Was that yesterday? Or was that today? That's today. So it's down 29 cents. It's made a peak D in the, so I got the sporadic, it still works in the Chapman wave. I don't have time to do it for the daily, but the daily is at a sell mode. The weekly is about to give a sell signal, but it needs to close under 28 to do that. I think it could. So here's the question. If you want to buy, I would have to wait because the MACD hasn't crossed negative, but the stochastic at 80% is good, but it's turning down. The relative strength is much lower than it was when it made that peak D. So at 28.24, there could be a bounce, but that bounce really has only 28.48 to 28.58 maybe as the upside, maybe 62. And then I think it comes back. Once you turn around, this 9-period moving average becomes the magnet, and I think it's going to break that. So I'm just going to say on the IQDG, which is the Wisdom International Quality Dividend Growth Fund, you're going to have to wait. And is it the same thing? Let me just think about this here. EUDG. EUDG, I've never done this before. Oh, it's almost the same. It's the same thing, except this is more negative because it's broken the 9-period moving average. The MACD, it's the same thing with the MACD and stochastic. Both of them, I'm just going to suggest, I don't see a buy yet. And if I do see a buy, it would be for a sideways chop, chop, chop within 24.97 and 25.50, maybe 60, and then keep coming to test. So because it's just sideways, and maybe, it's a dividend fund, and you've got a 5% risk to the upside, 5% potential to the upside with the dividend, that's good. But if it breaks down, there's a chance, and this is actually an increasingly stronger chance, that at 24.97 right now, down 41 cents, the 24.40 level could be hit quite quickly. And if that's done, eventually you're going to test the 200-period moving average of 23.25. Let me just say 23.80. So what we got a point down with about 70 cents up, 60 to 70 cents up, just right at this moment. I'm inclined to say just hold on. Ask me that question again next week, maybe Wednesday. But right now, I'm just going to say I don't see anything in it right now. Let's just look at junk to see if it's got the same. Yeah, junk is the Spider, BB, Barclays, high yield. I'm just looking at this just to see if I can get a sense here. No, I'm just going to suggest hold off. Hold off on a high yield. Should it be much higher? 37.12. It's down 7 cents. Yeah, something's not right yet. I'm not in sync with. I'm not aligned with what I can feel comfortable saying is the trade. I'm just going to say I don't see the trade right now. Good. So I hope that helps. Oh, the other question was the currency. Piki, could you tell me which hedging part we can look at the euro? Okay. So let me just give you parameters, and you can, or she can figure out whether to hedge or not. The euro right now is on the upper side of the rectangle that I drew a long time ago. You remember I drew this rectangle? Rectangles can last a heck of a lot longer than your patience. Wow, look at this. We've been in a trading range in the euro from 1.04 back in March of 2015 and a high of somewhere in the range of 1.17 all this time. So that's, talk about a range in currencies, that's tremendous. This is the first time there's a chance because of the 200-period exponential moving average of 1.61 that I think we can go a little higher, and that's where the dollar better find its support, because if it doesn't, that dollar goes down to 93.31. Not quite a proportional rally, and a rally in the euro-dollar currency to a weakness in the dollar itself. Why? Because 93.31 is the 200-period moving average, but if it takes it out, you're looking at 91.92 is the most important low from May of 2016. So let me just say, right at this moment, the MACD and stochastic are not showing any strength in the weekly chart of the dollar. That makes it much more vulnerable. And it's very interesting because when I look at stocks, multinationals like a J&J made a G/C in the weekly chart, leg D in the monthly, they should be helped, and this has been helped. But right here at peak F in the daily, I'm watching this closely. This is almost like yields, like the TLT. I've got a down arrow which says that Johnson & Johnson, multinational, very, I wouldn't say totally dependent on currency, but very dependent on the currency. If there are big moves, let's put it that way. It's just starting to pull back, and it's a G/C in the weekly. And I'm just going to say the MACD and stochastic is still very strong. I'm going to be putting the package together over the weekend when I'll have a lot more work and time to really go through these different aspects. So at this particular point, a currency hedge for at least the next week or so, I would say be prepared for the dollar to come down a little bit more. Be prepared for the euro to go up a little bit more. And then I'm going to do some work that says, what do I have in measured moves? In other words, 1, 2, 3, 4. Is this Chapman wave 5 in the weekly chart of the euro? But it's single leg A. This is very seldom you see such powerful moves in the monthly where you've gone from a lowercase h to a lowercase m. But you remember the pattern that I was speaking about? I'm upset with myself. I didn't use this as a trade. I just spoke about it for a year and a half. I drew it in. I've spoken about it. I said that in the Chapman wave methodology, if you study my book, the CD book called Introducing the Chapman wave Methodology, you'll see the pattern that goes from a lowercase h to a lowercase m, and then it can make a much bigger move, because if it takes it out, it's completed everything that it needs to. And that means that if the MACD and stochastic are very strong, there could be a rally to the next level of a peak on the left side. That would have been the high of August of last year at 1.136. And if it takes that out, closes above it, look for new recovery highs. And that not just takes out this high of May of 2016 at 1.1615, but it takes out the high of August, a year before that, at 1.171. And that actually could start an entirely new move, monthly move to the upside. It's an unusual chart pattern, but when you know your patterns, you know this lowercase h to lowercase m breakout phenomenon, that's something to keep in mind. I think it's going to stall just about at or just about within that range of 1.161. And that's where the dollar, for the first time in a while, actually has the chance to try to bounce. And I can only call it a bounce. Dow's down 105, S&P's down 16. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Trading is different than investing, but the opportunity to take advantage of short-term trends is only one if you get the direction right. Direction leveraged and inverse ETFs offer bold trades on U.S. and international stocks and bonds. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
So I was looking at this and I couldn't believe it. I said, something's wrong with this picture. I got a G/C in the TLT. And, I'm still thinking here that maybe the TLT rallies because money comes out of equities and goes into the bonds. I'm still thinking that. But we did take our profits, nice profit in the TLT. I'm thinking I might even consider going back in because their weekly chart is holding very well. I had a question from Bob from GT asking about the where I thought the bonds would go. So this is a question that I have, and I quickly went to the continuous contract, and I said something was wrong with that contract. I couldn't count it to make a C minus. Something was wrong. I finally figured it out. I'm looking, and I see that from the 12th to the 15th, it was 150.13, 30 seconds to 150.14. I misread that, called it A. That wasn't A. So this is the correct notation right here. Let me move these little guys away. This is A, B, C, D, E, F, and G. Got the G, same thing. So now I can put the down arrow. Good. Okay. And then we'll figure it out. But I don't think bonds are going to actually tank. I think that yields are going to hold pretty darn well. That's my thinking. And I hope that that's my thinking based on the technicals, right? So it's not my thinking, it is my assumption based on the technicals that they're going to hold a lot better. We'll see, especially if the market continues to go down 124 in the Dow, down 20 in the S&P. So I hope that helped you. Next question was, and this is Bob. Bob wants to know, JP Morgan, sell the news, MS, BAC, XLF, wave, etc. Here we go. Okay, let me just show you. The XLF, I've got in a daily leg E. Right, but it's not breaking down. It's holding okay, 24.68. But if it gets into the 24.40s, you've got to expect more of a digestion phase in the XLF, even if it becomes a little bit of a favorite. Okay, let's go. JP Morgan was the question. JP Morgan, fabulous move up, but it's a leg D, and leg D pulling back like this to a gap in leg D under the previous peak D weekly high. Says let's watch this. The weekly chart is starting to improve. The monthly chart holding the 9-period moving average is still very strong. So looking out, JP Morgan is definitely should go to higher highs over, I would even say over the summer. Bank of America question. Bank of America. This is leg A, leg B. Ah, there it is. So did it make a new high, 22.16, 22.07, started brand new AB. This is leg B, but all within the lowercase h that goes to lowercase m formations. The Bank of America at 24.20 up 32 cents has to get to the 24.80, 25.10 level by a week from tomorrow. If it can't have the whole week to do it, if it can't do it, It's just going to go sideways, and I don't think it's so the question is, was this Goldman Sachs? Yeah, okay, sure. Goldman Sachs, leg C in the daily, but still within the retracement. Gray leg C, I call it, because of the retracement. I'm going to have to put a plus sign. I don't yet have really a signal that says the buy mode. It's more buy signal. And the weekly chart is improving, but it really, at 228, it needs to get to 232. I said if it gets to the 228, that's very good. It is good. But it really needs now to get to the 230 to 232 level. And I would have to put a time limit on. I'd say it has to do it by next week. And if it doesn't do it by next week, instead it goes under 224, 224. It's at 225.34 up 212 right now. That's not good. Okay, so those are the questions we had. Now I had a question about the VIX. So the VIX index trading at 11.49, up $1.46. Look at that. Look at that. It's not an engulfing candle. It is for the last day or two, but there was a lower low of 9.68. This is a very good candle, but tomorrow's Friday. We've seen these good candles can dissipate in a second. Even the last hour on a Friday, I've seen going from above a 9-period moving average to below. So we're going to be watching this closely. At 11:47, it is in the area that gives you triple-digit down moves in the Dow, minus 17 or more in the S&P. And that's important. But let me just for 1 second go to the QQQ, because I want all the little ducks to be in order. You see, the Q's made a lower low, leg B, after making this arch formation that I was expecting. I discussed it yesterday, that I anticipated the Qs would fail, led by the semiconductor index. Well, the weekly chart is about to go to a sell signal. And in fact, depending on tomorrow's close, it could go immediately from a sell signal to a sell mode. And that says, we're not going back to 141.90 in the next few weeks. So that's a very important. You snap back by the end of the day, snap back tomorrow, you go from 137.65 even into the 130, 138.90, 139.10 area. I'll say, okay, holding, that's good. Sell mode in the daily. Weekly is only a sell signal, but we'll see. Okay, so I think I've answered a bunch of the questions. There was one more question. Was that in the den? Let me just see. Question. If I not answered any questions in the den, just give me a yell. There was a question. There. Okay, no. There was a question earlier on. Don't remember where it was. And that was, what about GE? Well, let's do my Dow quartet. Look, where did I put it? In the wrong place? There, GE. GE is trading down 2 cents at 27.06. Just had lousy candles and said that news-related spike to the upside. And that spike to the upside said it was just because what's-his-face is going to be out of there, Emmelt. It's a big deal. That doesn't change very much. And then it gave it all back in the Chapman Wave Eiffel Tower, straight up, straight down pattern. And what has it done? 27.10 was the low. It's below that from the low of the 18th. Not good. Leg D is coming up in the daily chart, in the weekly chart, and leg B continues down in the monthly. This is not a good sign. Next thing, GE, IBM. Let's see where IBM is. Question the other day, is IBM a buy? And I said, no, I think it's just sideways to down. I still think that. I think later on, IBM might actually be a participant in the big move to the upside, but it has to consolidate. Just give it time at 154. Triple M had a fabulous move to the upside, and then all of a sudden, Triple M, what did it do? It went to a peak C, all-time high, and then pulled back. And I have no... I can't. EFG, a G/C. I knew there was something wrong here. G/C, good chance that it's a G, and it's an F in the weekly chart, and a leg C in the monthly. Still very strong in the monthly. Good in the weekly. I think it pulls back. Part of the Dow problem, and it's in leg A, B, C. It's in leg D to the downside. Very quick D, and that says at about 208, expect 206 to 204. That's where it's going to try to have a bounce and make an H pattern. UTX. Now, this is very interesting. UTX finally squeaked to a new all-time high in leg C in the weekly in this cup formation. Leg E in the weekly chart. But look, the MACD and stochastic are turning down. So I'm going to watch this closely. Leg D just made in the in the daily chart. And remember, what's the pattern we look for in the Chapman wave? The objective is drag this to the side. You want to go from a peak A to a peak B to a higher peak C and peak D, the fourth highest peak. That's where other things can happen. All right? And what are we looking at here? Peak D. That's where other things can happen. I'll be right back. Basil Chapman, Dow's down 121, S&P's down 19. We'll be right back and we'll answer the question about Intel, Microsoft, Apple, Cisco. What way? Be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Everyone, we're back. So the Dow's down 121. So the questions came up here. What about Intel? Is this time to buy? No. I discussed this yesterday. Had a question about Intel 2 days ago, actually. Said, no, I think Intel is not one of the leaders anymore. You had some major leaders in the semiconductor index leading on the way up. Intel wasn't one of them. I think it's a kind of a has-been in many ways. No. Intel definitely not. What was it? Intel, Microsoft. Now, this is fascinating for me. Remember, I've been talking about the weekly charts of all those IBD 50 stocks. We went through them all, and they were all very close to turning down in their weekly, not just the daily, but their weekly charts. That's what makes me a little cautious here, actually very cautious here. Look, Microsoft made a peak D daily, a peak D weekly, a leg D monthly. Monthly is still technically very good, but not so much the weekly and the daily. I think it's coming down. I'm about to get a sell mode in the weekly chart of Microsoft. What was the question? Microsoft, Apple. Hey, how about Apple? How about them apples? It's already given a sell signal from the 15th of May at 156.65. A sell, I should have put this down arrow in. Weekly chart, peak D in the Chapman wave. But it's only leg B in the monthly chart. And that says, okay, literally from 143, let's talk about it again between 136 and 132. That's where I might be interested in Apple, but not yet. Yeah. What was the other one? Cisco. I haven't looked at Cisco for a while. Cisco, CSCO. Cisco, CSCO, Cisco. Yeah, peak D top on the 8th of May at 34.46. Only a peak C, but a gray C. Let me just double check. No, that was an all-time high. Very unusual. All-time high, FG. I could call it an alternate count G. For now, I'm just going to stay, FG, I have to call it. Alternate count FG, especially with that bad news plunge. Can't remember what it was, but bad news plunge. Cisco, there's a problem. Later on, I'd like to look at it at 31.52. Give me a yell when it's in the 30.50 to 28.70 area. Then we'll look at it again. Hey, that's all I can say. So Dow's down 141. This selling is going to be intense. This is not good. If you're long, you just put your stops in. That's all. If your stock is holding well, fantastic. That's the way I'm looking at it. So let me do a couple of things here. One is, for my opening call subscribers, what I discussed in great detail was the way that we were anticipating the 9-period moving average support would be broken. And in Chapman wave lingo, this is wave 4. And technically, I need another candle on the right side, but it has just taken out the left side low of 21,310. We did it right now. We're at 21,311. We're within 2 points of taking out that left side low. Take it out, and that starts Chapman wave 5, and that could be quite intense. So be careful here. That's number one. Number two is the MACD is still very negative in the daily chart of the Dow, and the stochastics at 69%, and the on-balance volume is only telling you, I don't think this is going to be a low until the stochastic goes under 20%. So I think this is here for a little while. So please be careful. If you want to talk about shorter term, is there a bounce coming? The 120-minute chart, if this is X, which I call X, the start of a new move, and this is a brand new leg 1 to the downside. Remember what I did? Let me have a look. Let me just see if it's active here before we run out of time. This was what I did when I was with Tommy, but we didn't actually get to discuss it in the show. I put in, we were looking at the 2-minute gold chart, and I put in Chapman wave 1, 2, 3, 4, 5. Well, we're below. We're at 1242 right now. When we were talking about it, it was at 1244. It doesn't sound like much, but it's the pattern on a 2-minute chart. That's got the pattern that says fulcrum, we could go even lower. Just be real careful out there, please. And if you want to check out my opening call, I think you'll be satisfied. We've been trying to do our best there. I'll be back tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,